Mata.
Yeah, good morning, everyone. So, what we had seen that international markets are doing comparatively well as compared to India. This is mainly driven by the US, whereas India is impacted because of heavy FII sellings. What we had seen that yesterday the dollar index moved up very sharply, which has cooled off in the evening. And now it is at around 104.54, wherein yesterday same time it was at 105.04. So some respite to dollar index which was moving up and was having impact on Indian Indian stock market performance, mainly on account of sale in the uh, sale by the FIIs. Yesterday, Fed also came up with 12.0. 0.25 cut in the interest rate, which was expected. And for further course, they had indicated that it will be depending on the data which will be coming. They are in favor of reducing the interest rate in future as well, but everything will depend on the data which comes for December meeting, and accordingly they will be taking the decisions. Apart from that, today even the China, the conclave meeting is expected to get completed, and the expectation is that post that Chinese government is likely to announce some stimulus package for the revival of China economy. So that is awaited. So overall, what we see that we had seen a sharp correction yesterday. Now it should consolidate now and may see some bounce back from the lower level. I'll request technical team to take up from here.
Yeah, thank you, sir. Good morning, all of you. Yesterday, we already mentioned that the first half an hour, it Nifty managed to sustain 24,400 and 370 range. Then we expect further upside momentum. Yesterday failed to this support and trade below first half an hour below this range. Then we see the some pressure yesterday session, and Nifty closed near the 24,000 to over 200. Today, majorly support plays around 24,140, and if Nifty break this range, then towards next downfall towards 24,070 and 24,000 at downside. Upside 24,300 and 340 and 370 is a major resistance for today's session. So we closely watch first if Nifty 24,140 below, then we expect further pressure to be increased. If Nifty managed to sustain 24,270 for intraday session and trade above this range, then we expect the range that 24,370 in upper range and downside range 24,140. Bank Nifty also trading near the support zone, that's 50 DMA, that is 52,000 and 51,900 at downside. If Bank Nifty break this range, then we expect further pressure in Bank Nifty towards 51,700 and 51,500 at downside. Upside 52,500 first immediate resistance for Bank Nifty. To be closely watch in index break the important intraday resistance zone, then we expect further upside momentum. Otherwise, we expect this range today is sideways and maybe trading in the range only. Uh, Stock specific, Navin Fluoro looks positive. Yesterday we saw some positive breakout in daily and weekly chart with volume breakout. Do we expect Navin Fluoro to be continue the momentum towards 3670, 3700 in our side? Majorly support place around 3450. And negative side, FNCG stock looks weak. HUL trading below the important support zone, and we expect this pressure to be continuing in HUL in the Sun Year towards downside 2400 and 2390 is the first target for HUL. Upside immediate resistance place around 200 DMA, that is 2540. So those have short position, they can keep it and keep a stop loss 2540 and upside and downside target around 2390, 2370 at downside. So those two stock we recommended yesterday session. Navin Fluoro in positive side and HUL for negative side. That's it for technical derivative I can get.
Yeah, thank you. Good morning, everyone. So on the derivatives front, as you're seeing, there is not much of a change from the open interest position wise, as the call rider and put rider positions are intact on the range of 24,500 to 24,000 market 24,500 level. We are seeing the call rider positions is standing strongly, and once if 24,500 clearance we get in the market, then only we expect the fresh leg of buying in the market and the stable buying on the upside. But till the time 24,500 is not getting broken out, till that point of time, we expect the market to remain in the range of 24,000 to 24,500 level. The initial support for the market Nifty will be at 24,000 level. Once if Nifty goes below 24,000 level, then only we might witness again the selling pressure to be seen. The pressure, the buying which we have seen in Wednesday session got completely liquidated in yesterday's session. So again, Nifty completely trading in the range bound momentum. But as per the current scenario, we expect the long need to be holded with the support of 24,000 mark on the upside stretch toward 24,450 to 24,500 level. While on the PCROI front and India VIX is trading at a stable rate, and we expect it to remain in the range for next 1 to 2 days of a trading session. While on the stock specific and sector specific front, counter that looks positive in today's session will be Apollo Hospital, Federal Bank, TCS, and Gujarat Gas looks positive, while on the negative side, Persistent System, Aisha Motor, and Elkem looks negative. So that's it from Better Different. Thank you.
Good morning. Clean Science and Technology Limited posted the results below expectations. In terms of revenue, it has seen the growth of 32% on a YY basis. This was mainly led by the volume growth across all segments. Performance Chemicals witnessed highest volume growth. On the margin front, gross margins were impacted almost by 350 basis points versus last year, mainly due to change in the mix and the increase in the prices of selected raw materials. The cascading effect was seen on the EBITDA margin, which was down by 360 basis points at 37.7%. During the first half, the company has incurred the capex worth rupees 155 crore, mainly for its subsidiary. The management is focusing more on the volume growth and customer retention with immediate price increases. The stock is currently trading at a PE of 43 times to FY26 EPS, and we are neutral on the stock. Emami Limited posted the results in line with expectations. Revenue grew by 3%, where domestic business has seen the growth of 2.6% and international business grew by 6%. Excluding Bangladesh, international business has seen the growth of 12%. EBITDA margin improved at 28.1% versus 27% in the same quarter last year. Company's major brands has performed well in the quarter, while it has seen the demand was slower given the challenges led by high food inflation. Also, in the international markets, political unrest and issues in Bangladesh has created some disruptions. It has launched 11 new products during the quarter. The stock is currently trading at a PE of around 30 times to FY26 earnings, and we will provide the outlook post the con call. Yesterday, we attended the con call hosted by Chambal Fertilizers. During the call, the management highlighted quarter two earnings growth was mainly led by the volume and margin growth in the CPC and specialty nutrient segment. It is optimistic on its diverse product range with 62 products, which caters to the potential requirements by the farmers across all categories of weedicide, fungicides, and the seed treatment. In the first half of the year, the company has launched 10 new products, and it will continue to focus on the high value crops, geographic diversification, as well as growth in the new territories. Also, it has a strong pipeline of around 2 to 3 products for Rabi season. In the first quarter, it has launched Uttam Pranam, which is a nano biophosphorus, a part of specialty nutrient segment, which has delivered the good results. In terms of energy efficiency, the company has 3 to 4 plants, which will be extended up to 2028, and these projects are generated in-house, where these are given to the engineering consultants. On the technical ammonium nitrate project, the total project cost is at around 1600 crore, where the production capacity is at around 240,000 metric tons per annum, and the project is expected to be completed by October 2025. Around 600 crore to be spent on this project by FY25. We are positive on the stock, where the stock is currently trading at a PE of 12 times to FY26 earnings. Thank you.
Good morning. Steel Authority of India posted its results yesterday. Results are below expectations, which is due to lower steel prices and weaker demand. Offtake came at 4.1 million ton, which is above the quarter-on-quarter volume of 4 million ton, but lower from year-on-year volume of 4.8 million ton. EBITDA per ton came at rupees 3,091, which is 44.3% lower quarter-on-quarter and 61.6% year-on-year. EBITDA includes rupees 1,636 crore recognized during the quarter ended 30th September 24 towards rail price revision for the financial year 22-23. Excluding this, EBITDA is below expectations. Revenue from operations has increased 2.8% quarter-on-quarter and has decreased 17% year-on-year. EBITDA margin came at 5.1% with quarter-on-quarter it has increased by 9.2% and year-on-year it has increased by 13%. We also attended the con call of Tata Steel yesterday. For the operations going on in India, the company expects the second half to be better in terms of demand, driven by construction activity and government spending. The company commissioned a second blast furnace in Kalinganagar plant. This plant will be having lower cost of production. There is significant progress in commissioning a 5 million ton blast furnace at Kalinganagar, already producing about 7,500 tons per day. For the operations going on in Europe, the company is engaged with the Netherlands government on potential support for decarbonization project. The company will receive 40% grant on a quarterly basis for UK capex. Planned investments include 1.25 pound billion, partially supported by 500 million grant for from the UK government. The global operating environment remains challenging, impacted by subdued economic activity, inflationary pressures, geopolitical tensions, particularly in US and EU. China's steel exports reached a 8-year high in September, exceeding 10 million tons, with a year-to-date exports around 100 million tons. This surge has distorted global steel trade dynamics and negatively affected regional prices. In response to this, several countries, including India, have initiated anti-dumping investigations on specific steel products. Thank you.
Good morning. Mahindra & Mahindra posted the result above expectations. Revenue grew by 6.6% quarter-on-quarter and 12% year-on-year. EBITDA grew by 28% quarter-on-quarter and 20% year-on-year. EBITDA margin came at 18.2% versus expectations of 14%. PAT is also above expectations. We have also attended Mahindra & Mahindra con call. So the company is revising its outlook for the year to between 6 to 7% growth, which implies second half growth of 13% to 15% for tractors. In SUV, company is not changing its projections for the full year, expecting 15% to 18% growth in SUV portfolio. Two new electric origin SUVs will be revealed in November and will be in the market in early 2025. Mahindra & Mahindra's auto business performed well with revenue market share of 22%, grew by 2% year on year. Passenger vehicle margin rose by 140 basis point year on year. Rural sentiment showed improvement with tractor market share reaching 44% market share. Logistic and hospitality business also saw growth with plans for further investment in hospitality. So the overall outlook for Mahindra & Mahindra is positive. Thank you.
So, from yesterday's result, Indian Hotel and Mahindra looks good, and they had guided for better features to going ahead. Whereas Tata Steel indicated that the near-term performance in the next quarter will be subdued. Whereas the Emcure, which is a pharmaceutical company, has also indicated that they will be outperforming the industry. No doubt, this quarter result was also good, but that was also driven by the acquisition which the company had done. The company is Emcure, which got listed around 2.5 months back. So there again, the outlook is positive. Apart from that, Inox India has got one large order, so that can act positive for them. And Borosil Renewable, which is struggling because of the dumping from China, is likely to get anti-dumping duty on the glass imported from China, so that can act positive for Borosil Renewable. That's all from us, and I'll request commodity team to take up from.
Yes, sir. Thank you very much. Good morning, everyone. So in today's session, gold might test 77,700 and witness some selling pressure. So for trading purpose, one can initiate a sell around 77,700 with a stop loss of 78,000. So price there is a hurdle at 78,000. So unless it is broken, we see profit booking again. So on downside again, 77,400, 100 is the level where prices are expected to test. So for trading purpose, one can also buy around 77,100, maintaining a stop loss of 76,800. Similarly, silver also we are expecting prices to test 93 500 on upside. So for trading purpose, one can initiate a buy around 91,700 to 91,500 and maintain a stop loss below 91,000. On upside, 92,700 and 93,500 are the level where we expect profit booking. uh, test 6050 levels, whereby one can initiate a buy with a stop loss of 59 test 6150 6180. And in natural gas we are witnessing a consolidation. Prices are resisting to 236 on the upside, on downside 22 844 with a stop loss of 840. On upside again, 850 is the level where one can book profits. And in zinc, there could be some pullback till 287, 288. 288 the level where prices are resisting. So for trading purpose, one can also sell around 288 and maintain a stop loss of 290. Whereas on downside, again, to 283, one can initiate a buy with a stop loss of 281. That's it from us. Thank you very much.